Okay traders, welcome back to the next video tutorial. What I want to go through here is the formations that you're going to find, or what I should say then is the formations that you should look for during a breakout of a 4-hour zone or level, whether it be a manipulation point, a 4-hour supply and demand, or support and resistance, whatever. So the candlesticks will form in a specific way when it comes to breaking out above or below specific 4-hour zones. Okay, so the most important thing that we need to look at on each of these examples, whether it be the 4-hour, the 1 hour, 30-minute, or the 15-minute, is that we need to make sure that we're closing above the level. Okay, we have to wait. It's vital that you wait for the candle closure. Okay, I know it's very easy to get excited that we're breaking a level and there's potential that there's free traffic to the left that we're going to trade into, but patience pays in this game. So we need to wait for the closure, whether it be a 10 p.m. 4-hour close or an hourly close, 30-minute close, whatever. What we then need to do is we need to make sure that we've got the same amount of patience to wait for the formation to occur, to give us that confluence and that confidence that the trade is actually going to go in a direction that we think it's going to go. Okay, so the first example that I've got here is the 4-hour. This is mainly a 4-hour as opposed to a 4-hour and a 1 hour. Okay, because on the 1 hour, obviously there's four 1 hour candles, okay, involved in what could potentially happen in this scenario. Okay, so wait for the 4-hour close. Okay, then we wait for the wick to form. If you go back through any of the videos, you always wait for the wick to form, because when a new candle closes, generally what you'll see is a small little pullback. Okay, now what we need to make sure is that the candle wick doesn't come lower than the previous candle wick. Okay, because that means what? We're creating a new higher low, which ultimately would, normally that would result in a new higher high. So we got a higher low followed by a higher high here, right? So higher high, higher low, higher high. That's what we're anticipating. Okay, so very simple. Wait for the breakout, wait for the closure, wait for the wick to come down, and then as the candle, okay, as we've gone through many times in the other videos, wait for it to come down. Ideally it respects the zone. It doesn't have to. It can come down here, it can just ping off the top of it. When the candle then moves past the wick on the previous candle, we put our buy stop orders in, and generally speaking, price will move in our favor. Okay, now then, when it comes to a 1 hour or 30-minute, okay, so the 1 hour would generally be 1, 2, 3. I'd say maybe that could be the same case on the 30-minute, but you could also see maybe 4 candles. So you'd see a breakout and then 2 30-minute candles, and then the next candle will be the entry candle. So it would be, in simple terms, then we got the breakout, we got support being created by a downwards facing candle, then we've got the breakout candle, which is the one that we need to enter on. Okay, again, you must pay attention to the wicks, because we're creating higher highs as we go up. Okay, if you went right down to the lower time frames, we'd be doing kind of zigzags. So it's a lot harder to read, takes a lot more focus. Ultimately you're getting the same result, but it's what I'm teaching is how to simplify everything and enter on a higher time frame with very similar to results of what you can get on the lower time frame. So breakout, support created, maybe another candle, maybe not, it doesn't matter, and then follow the wicks up. Okay, make sure we're closing above, and then entry on the breakout of the high, because if we're creating higher lows, the next part of the process is that we're going to create a higher high, so we can break out and look to take our profit at 2R. When it gets down to the 15-minute, okay, we're getting a lot more choppy here, right? So candle comes up, breaks above, sometimes it comes down and closes below the zone, which activates sellers in the market, like we talked about in previous videos. So what this is doing is basically creating liquidity above the zone. Okay, so if sellers are being introduced here, stop loss orders are being placed above here. So as price comes down and it settles down, volume starts to die out. And then again, look at the wicks. Okay, so we got like a V shape here. All right, so we're looking at the candlesticks coming down, and then what happens is they start reversing. Okay, so we got a new high, higher low, higher high, higher low, and then we take the breakout in the same principle as we have done on the two other entry methods, okay, on the higher time frames. So I hope that makes sense. I'm going to put this PDF in the channel for you to print off or keep on your desktop. Put it as a screensaver if you want. So you got it to hand. Memorize these patterns, and I'll see you in the next video.